Welcome to TradeTheMBI.com. This is John. This report is for the 17th of May. Well, we got the dip below the red line with the orange here, like we expected after the crossover. And again, this is what we point out when we see that steel crossing above cyan. At the same time, you have green crossing above red. Usually you get a little pop after that, and that's exactly what took place. And it was very reasonable and well within our expectations after the support at the 50%. When you get this kind of crossover right at that key point, tends to have a little bit of oomph to it, and we did see this happening on the 5K, 50K that we were talking about from before, and the follow-through is decent. We're getting a bit of a retrace, and when you get that kind of a pop, you can get as much as, 50% retrace, which is pretty close to where we're at right about now with it. We're going to have to see green cross above cyan. If we see a short attack as we get closer to that 2900 range, would not be inconsistent with what we would normally see from a resistance standpoint, but the question will be whether shorts activate within that time frame or not. Likewise here from the NQ, NASDAQ, doing the same thing. We've got to still have to cross that yellow shakeout to confirm a continuation run, as opposed to this just being a B, C, then lower move from the dip. And that's going to be an interesting one, whether we get to the positive shakeout readings or not. At this particular point, without that immediate cross of the green moving above cyan, it's going to be suspect, especially going into a weekend configuration there. We'll get more from our 5K and K readings again. From a euro standpoint, it's not providing any real oomph for the S&P. It continues to trail lower, and we kind of expected that with what we were seeing from the weakness of that DOC red. From once we got the little pop, we were looking for that move back up towards the 50%, and it's just faded right back to the bottom side. And in that same softness, we saw gold, similar situation. It crossed below red right here when we were at the peaks, a little bit of consolidation, but once you break that ABM yellow, it just fills right back in there. In fact, we've got a dip below the red line on that, so that's going to have continued issues holding this green ABM value. I'm going to put that right there. That's that 121.21 on the ETF. Futures be a little bit different. So here we go from a 5K, and this one is running like we talked about before, the Diocon Paint 2. Nice run-ups, just cyan underneath red is always buy, and it pretty much stayed that way, and you have to actually get that steel to come back above, and that doesn't happen until literally right here. The steel goes back above cyan and then crosses back below. At the exact same time, you get green below red and the orange spiking up. Now, am I a little concerned at this particular point with the red so high up? Yes, but it's also a little bit less than the extreme peak that we had here where we were above 13.5, and that is not something that can sustain itself for extended periods of time. Another warning was the magenta over 15, but within that setup you had just a ton of positive extremes. It took a little bit while. The secondary one that took place right here, not that much different price wise from the turnaround on the DOC spread that took place right at the 50% line. It just lets you know that you were going to have a little bit more of a continuation. Fought its way right back up to the same spot, but also did that on lower DOC red. Again, these are those little telltale signs that you look for, and right there, similar situation where you have green moving below cyan, steel coming down and crossing, and just flat red, which boom, and that led to moving all the way back down. And so back into this, 2880, 2870 were previous algo activity areas, and sure enough, right within both of those. So I think it was really nice from a range standpoint as well as signal point of order. I was just going to show us here. This is with the GAM function paint bar. As we had the gold configurations rising through most of this positive setup, but again, it makes it very easy to follow this in a continuation when you don't have any of that steel coming back up and crossing below, and pretty much stayed that way throughout there. And I think that was pretty clean as well. So either one is going to give you that same trend move going through. I would look for really the importance of maintaining above this 2870, because I think that becomes a inflection point to develop support. We had to fill back positive extremes coming all the way to pretty much exactly where we're at. These other previous ones from earlier had sort of been taken care of with the dip right back here. So I love it when the algo just fills itself back in cleanly. It doesn't leave us any real question marks, and I think that makes it easy to go forward. And plus, it's just nice from full targeting, especially if you're short from this peak near the 100% range. You know you've got these markers that have to be filled, so you're not as concerned about some of the little movement in between, and that just becomes a question of, in that first dip towards the 2880, whether you want to take gains or you're just going to let it ride a little bit longer until it's able to prove itself from a significant buy standpoint. That's the long and the short of it as we go into the weekend with this setup. Looking forward to see how we trade this one in between, because we're sort of at a crossroads whether or not they're going to hold this support line or not. And I think that becomes critical from that daily standpoint. We really would want to expect to see a continuation of green breaking into a new zone, as well as red getting closer to that, because breaking above the 13.5 certainly had that impetus. Next set is going to see it follow through, and strong to have both midterm, long-term buyers matching with the short-term buyers. Gives you that trifecta of power, and complement that with shorts covering within that situation, moving below the zero. Of course, shorts turning back up, I think, becomes a bit more of a positive, particularly if you're still maintaining red and green moving higher, because more shorts added into it just is going to create the opportunity for more buying. It's when they're weaker like this that it forces bulls to buy the market up, and that takes a little bit more. And so it's, a lot of times you get the little pop, kind of consolidate for a day or two before you have your next run. As always, though, if there's something new and interesting, I will certainly put it up. Trade well. We'll talk again later.